recent weekend papers, I picked up this article which is titled Mortgage Stress Explosion in New Zealand. So it starts saying roaring interest rates and house price increases have triggered an explosion in mortgage stress, with a number of households devoting more than 40% of their take-home pay to home loan repayments. So putting that in perspective, a few years ago, if you were going to go and borrow money on a mortgage, the banks would be looking at sort of using about 30 to 33% of your take-home pay to work out whether you could afford to borrow that money. So now it's gone up to 40%, which is a significant increase in the space of just a few short years. So the article goes on to say 500,000 New Zealanders are now living in mortgage stress, spending more than 40 cents in every after-tax dollar their households earn on a mortgage. So, I mean, that's just huge. We've got 4 million people in New Zealand and we've got 500,000 of them in mortgage stress. So it's a significant issue for most New Zealanders. Overall, 175,000 households, or 11.2% of households, are in mortgage stress, which figures up to June 2007. And if you look at it as a comparison, in 2004 it was just 3.7%. So, you know, that's a significant increase. Goes on to say, a couple of mortgage brokers have said new entrants into the housing market are under even greater strain, with some saying that they're spending 50 to 60% of their after-tax income on their mortgage. I mean, that's just enormous. That's getting up to almost 2/3 of your income that you take home after tax is spent just on your mortgage. And then there was a recent survey done by the international credit ratings agency Fitch Ratings, which ranked New Zealand as the world's riskiest housing market, with our prices amongst the world's most overvalued. In a survey of 16 developed nations, New Zealand households ranked second only to Denmark for their debt vulnerability. With its high interest rates, New Zealand has the worst interest to income ratios in the survey. So that was interesting to me, because I actually thought that the US potentially would have been a lot worse than us as far as their debt levels, but what this article is saying is that New Zealand is second only to Denmark. So that, you know, that's a huge issue. And, you know, when they're talking about worst interest to income ratios in the survey, what they're basically saying is that the amount of money we spend on our mortgages as a percentage of our income is the highest in the developed world. I mean, that's just huge. So what are the things, if you're suffering from mortgage stress, what are the things that you need to look at? Well, the obvious thing is to go back to your budget. So what you've got to do is you've got to go through everything that you spend and sit down and say, am I spending my money wisely? Where have I got some fat? And interestingly, because a lot of people will say, well, we don't have any money left over at the end of every month, but if you actually sat down and analysed it in detail, you might find that there are a number of things in there that you are buying that you don't necessarily need. So when we did one of the Money Man shows last year, for instance, what we were looking at was getting everyone to take a notebook for a month. And so what they do is they carry around a notebook or even a piece of paper and write down every single cent that they spend in that notebook. And while we found that most of them were only earning pretty average New Zealand incomes, they were all spending $400 to $600 a month more than what they thought they were spending, just on stuff. Takeaways, magazines, sweets, you know, all sorts of things that you just really don't get any value out of and you don't actually know that you're spending. So if you can go through that exercise and cut down your expenditure by a few $100s a month, and then what you can do is you can do a couple of things. One is actually put some money into a savings account to prepare for potentially your interest rates or your mortgages going up. Or the second thing is you may have some other consumer debt that you may want to just pay off as soon as you can, which will reduce your overall expenses per month. So, or another thing to look at is, you know, are there any ways that you can, on a short term, increase your income? Have a garage sale, get a part-time job, all sorts of things. So really it's around probably not panicking, it's just going back to your spending and going through it with a fine-tooth comb and see if there's any things that you're spending your money on that you don't necessarily need to.